Hey everyone, and welcome back to Talk Tickers. You know, we talk tickers, and today we are diving deep into TSMC's latest earnings call.
Yeah, this one's
Oh, it's a big one.
it's a really big one.
Huge implications for the whole tech world.
It's like a crystal ball.
Yeah, so let's jump right in. TSMC just wrapped up 2024 with a record-breaking 30% revenue jump, hit $90 billion.
That's a lot of chips.
A lot of chips. And a huge chunk of that growth is coming from their cutting-edge 3-nanometer and 5-nanometer chips.
Which is interesting, right? Because when we look at the numbers, AI is already playing a huge role.
Oh, really?
Oh, yeah. They said a significant portion of their revenue comes from AI stuff already, like AI GPUs and all the memory that goes with them.
AI is already that big of a deal for TSMC.
Oh, yeah.
Huh. I mean, I shouldn't be surprised given how much we hear about AI these days.
Yeah.
But what does that mean looking forward?
Well, they're predicting that AI revenue will double in 2025.
Wow.
Yeah. So it's like AI is pouring gasoline on this fire.
So it's not just about smartphones and laptops anymore, huh? It's like the brains behind those devices are getting a serious upgrade.
Exactly. And speaking of upgrades, TSMC isn't just sitting back and counting their chips in Taiwan.
What do you mean?
They're building new factories all over the world.
Oh, wow. So like those fabs we hear about.
Yeah, exactly. The Arizona fab is already in high volume production. The one in Japan has just started production, and they're making good progress on one in Germany.
So they're going global.
Mm.
But I've heard that building these fabs outside of Taiwan is expensive. Does that mean the chips they make there will cost more?
You're right. Building those fabs is expensive, and yeah, it does affect the price. TSMC actually confirmed that their U.S.-made chips come with a premium price tag because it costs more to produce them there.
So even though they are made in America, they come with a made in America price tag.
Kinda, yeah.
Interesting.
Yeah.
But with all this focus on global expansion, are they still innovating on the tech side, or are they just busy building factories?
Oh, they're definitely still innovating. While everyone is focused on the new fabs, they are quietly making waves with silicon photonics and CPO technology.
Silicon photonics, I've heard of that. Isn't that using light instead of electricity? Sounds like something out of Star Trek.
It is pretty futuristic. It's all about using light to transmit data, which means faster speeds and lower power consumption.
Okay, I can see why they're excited about that. And what about CPO? What does that stand for?
CPO stands for co-packaged optics, and it goes hand in hand with silicon photonics. It's about putting the optics and the electronics closer together.
So making things even faster and more efficient.
Exactly. And this is important because, AI and all this data is putting a huge strain on data centers, so they're looking for ways to upgrade them.
So these two technologies are like the dream team for next-gen data centers.
Pretty much. And investors should definitely be paying attention to that. But that's not all. Let's talk about something else that's in high demand.
Okay, what is it?
Advanced packaging, specifically something called CoWoS, chip on wafer on substrate.
CoWoS. That's a mouthful.
It is. Imagine building a supercomputer, but instead of spreading all the chips out, you stack them vertically, like Lego bricks.
So it's like high-tech Tetris, where you try to cram in as much computing power as possible.
Exactly. And get this, TSMC hinted that CoWoS might soon be used for CPUs and server chips.
Oh, wow. Imagine the performance boost our laptops could get.
Right. And this would be a game changer for data centers, too. But with CoWoS in such high demand, can TSMC even keep up?
Yeah, that's a good question. I guess we'll have to see. But hold on, I heard they're talking about AI making its way into everyday devices like smartphones.
You mean Edge AI? Yeah, that's going to be huge.
Edge AI. What is that exactly?
Think of it this way. Instead of relying on the cloud for all your AI needs, your smartphone, your laptop, even your toaster, could have its own AI brain.
Wow, so it's like AI on a personal level.
Exactly.
Yeah.
TSMC expects Edge AI to take off in the second half of 2025, and that means they're going to need a lot more chips.
More chips, more upgrades. It sounds like a win-win for TSMC.
Absolutely. But that's not all. They also talked about their new 2-nanometer technology, N2, as they call it.
N2. That sounds pretty futuristic.
It is. They are saying it's on track for mass production in the second half of 2025, and it's going to be even better than their current 3-nanometer chips.
Wow, so even smaller and more powerful.
You got it.
Yeah.
And they even teased something called N2P, which is an enhanced version of N2 coming in 2026.
They're not slowing down at all. But with all this competition in the chip industry, is TSMC just looking out for themselves, or is there any collaboration going on?
That's a great question. And actually, they talked about that. They emphasized their partnerships with IDM customers, those companies that design and manufacture their own chips.
So they're not just going it alone.
No, it sounds like they're working with others to drive innovation.
That's great to hear.
Yeah.
So taking a step back, what does all of this mean for the future of tech?
Well, it looks like TSMC is in the driver's seat when it comes to AI, and they are pushing the boundaries of what's possible with silicon. It's going to be a wild ride.
It sounds like it. So buckle up, everyone, and get ready for a future powered by AI.
It's coming faster than you think.
Yeah.
Okay, so the earnings call also had a Q&A session, and analysts had the chance to ask TSMC's leadership some tough questions.
Oh, really? Like what? What were they most curious about?
Well, one of the first things they wanted to know was about TSMC's long-term strategy, especially regarding their expansion in the U.S.
Yeah, I bet with all the talk about bringing chip manufacturing back to the U.S., they wanted to know if TSMC would build their most advanced factories here.
Exactly. And there's been some talk about Taiwan maybe loosening some regulations too, so it's a hot topic.
So what did TSMC say? Are they going to build their most advanced fabs in the U.S.?
Well, CC Wei, their CEO, said that while they are committed to meeting customer demand, he also explained that it's really complex to introduce their most cutting-edge tech to a brand new factory.
Yeah, that makes sense. It's not like you can just plop down a factory anywhere and expect it to work the same way.
Right, they need the right people, the right suppliers, the whole ecosystem.
So it sounds like Taiwan is still going to be the main hub for their most advanced chips for now.
For now, yeah. But he did say they have strong relationships with both the current and the incoming U.S. administration, so they're not ruling anything out.
Okay, so they're keeping their options open. Speaking of open, what about their financial outlook? With TSMC's gross margins approaching 60%, analysts must have been wondering if they could squeeze out even more profits.
Oh, yeah, they were definitely interested in that. Wendell Huang, the CFO, reminded everyone that a lot of factors affect their profitability.
So it's not just about selling more chips.
Right. It's about how much they're using their factories' pricing and the mix of technologies they're producing. It's a balancing act.
I see. So they're juggling a lot of different things.
Yeah.
But did he say whether they could hit that 60% gross margin or even higher?
He said it's not impossible, but there are some challenges.
Oh, challenges. Like what? Is it getting harder to make these tiny chips?
Well, one challenge is the cost of expanding overseas. Remember all those new fabs they're building?
Yeah, in the U.S., Japan.
Exactly. They're estimating a 2% to 3% hit to their margins every year for the next 5 years because of those new fabs.
Wow, so those factories are going to be expensive.
They are. And then there's the whole global economic situation, inflation, supply chain issues, possibility of a recession. All those things can impact demand for their chips.
So it's not all smooth sailing for TSMC. They have to navigate some rough waters to keep those profits coming in.
Definitely. But let's go back to those overseas factories for a second. Analysts were really digging into why those chips are more expensive to produce.
Yeah, we talked about it earlier, but what's the main reason?
Well, part of it is the higher costs of setting up in a new place. But it's also about scale, right? TSMC's factories in Taiwan are huge.
Yeah, they can produce chips more efficiently.
Yeah, it's like the difference between baking cookies at home and running a giant cookie factory. You get more bang for your buck when you're making millions of cookies.
Makes sense.
Yeah.
So those smaller factories in other countries just can't compete with the efficiency of Taiwan yet.
Not yet. But okay, let's talk about something else that came up. The elephant in the room.
What's that?
The U.S. export restrictions on China's AI industry.
Oh, yeah, that's a big one. How is TSMC handling that?
Well, analysts were really interested in how these restrictions might impact TSMC's business with China, because China is a huge market for them.
Yeah, I bet they were worried that TSMC's profits would take a hit. So what do they say?
CC Wei was actually pretty upfront about it. He said that while they're still figuring out the full impact, their initial assessment is that it's manageable.
So they're not panicking.
Not yet. They said they're working with their customers to apply for special licenses for chips that aren't related to AI, and they seem pretty confident they'll get those licenses.
So they're finding ways to work around the restrictions.
Yeah, it sounds like it. But let's be realistic, the AI market is exploding and everyone wants those AI chips. So are there any potential bottlenecks coming up?
That's a good question. I mean, is there anything that could slow down this whole AI train?
Analysts were particularly focused on HBM high bandwidth memory. Remember we talked about that earlier?
Yeah, that's super fast memory for AI.
Right. And even though TSMC is expanding their CoWoS capacity, some analysts are worried there might not be enough HBM to go around.
So HBM could become a bottleneck for AI development.
That's the concern. So analysts wanted to know if TSMC is worried about running out of HBM.
What does it say?
CC Wei didn't give any hard numbers, but he did admit that their capacity is very tight right now. They're working hard to keep up with demand, but it's a tough situation.
So it sounds like HBM supply is something to watch closely.
Definitely. But let's not forget about those other cool technologies TSMC is working on. What about those next-gen data centers with the silicon photonics? Any news there?
What about CPO?
One analyst even mentioned that Jensen Huang, the CEO of NVIDIA, visited Taiwan recently.
NVIDIA, the AI chip giant.
Yep. And this analyst was speculating that maybe he's trying to lock down the supply chain for CPO.
Oh, wow, that would be a big deal. So what did TSMC say about all that?
CC Wei confirmed that they are working on silicon photonics, and they're getting good results. But he said it'll be another year or two before they can do high-volume production.
So CPO is still a little ways off, but it's definitely on their roadmap. And what about CoWoS? Can they really ramp up production to meet demand, especially with those rumors about it being used in CPUs and server chips soon?
Yeah, everyone's wondering about that.
So did TSMC give any details about their plans for CoWoS?
They were pretty vague about specific timelines, but CC Wei did hint that CPUs and server chips with CoWoS are coming.
So it's not just a rumor, it's really happening.
Yeah, it looks like it. Which is exciting, but it also raises another question.
What's that?
What if everyone wants CoWoS and there isn't enough to go around?
So it could become another bottleneck.
Exactly. It's like a game of musical chairs. If there aren't enough CoWoS chips, someone's going to be left out.
And that could slow down the whole industry.
Right. It's a delicate situation. But TSMC is known for being really good at scaling up production, so I'm sure they'll find a way.
Yeah, they've got a pretty good track record. But speaking of track records, one analyst brought up something interesting from Morris Chang's autobiography.
Morris Chang, the founder of TSMC.
Yeah. Apparently he wrote that TSMC's overseas fabs are basically copies of their Taiwan model. And this analyst was wondering if that could make it harder to close the cost gap between the U.S. and Taiwan factories.
So if they're just copying and pasting the same model, will those overseas fabs always be more expensive?
That's the question. So what did TSMC say?
CC Wei said that they do transfer knowledge and best practices from Taiwan, but it doesn't mean they're doing things exactly the same way everywhere. They're always looking for ways to improve efficiency and cut costs.
So they're adapting their approach based on the location.
Right. It's about finding the right balance between using their existing expertise and tailoring their operations to each region. But he did say that Taiwan will probably remain the most cost-effective location for a while.
Okay, so they're working on it, but it's not a level playing field just yet. But let's move on to something else that came up. The role of IDMs.
Those companies that design and manufacture their own chips.
Yeah, some analysts were wondering if more IDMs turning to TSMC for manufacturing could be a big growth opportunity for TSMC.
It's an interesting idea. As chip manufacturing gets more expensive and complex, more companies might decide to outsource it.
So they can focus on designing the chips and leave the manufacturing to the experts?
Exactly.
Right.
And TSMC is in a great position to benefit from that trend.
Did they make any predictions about how much this IDM outsourcing could boost their business?
CC Wei didn't get into specifics, but he did say that IDMs are important customers and partners. So it sounds like they see this as a positive thing for their business.
Okay, so they're not giving any numbers, but they're definitely optimistic about it. But let's get back to the AI discussion for a minute. Analysts had a lot of questions about AI demand and TSMC's outlook for this technology.
Yeah, they wanted to know if TSMC saw any potential upside to their prediction that AI accelerator revenue will double in 2025.
So basically, they were asking if AI could be even bigger than they thought.
Pretty much. And CC Wei was careful not to overpromise, but he did say he hopes there's upside and that they can supply enough chips to support that growth.
So he's optimistic but realistic.
Exactly. He sees the potential, but he also knows they need to be able to deliver. But what about the longer term? What about AI growth beyond 2025?
Did they say anything about that?
He said it's too early to make predictions about 2026 and beyond, but he did mention their long-term forecast of a compound annual growth rate in the mid-40s for AI accelerators over the next 5 years.
Wow, so they're expecting strong growth for a while.
That's what it looks like. But let's not forget about Edge AI. Did TSMC give any updates on that?
Yeah, are companies actually making Edge AI products? And what does that mean for the chip market?
CC Wei said they are seeing customers adding more AI processing power to their devices, which is leading to a 5% to 10% increase in silicon content.
That's a pretty big jump.
It is. And as Edge AI gets more advanced, those devices will need even more powerful chips.
So Edge AI is going to drive even more demand for TSMC's technology.
It looks like it. And here's something else interesting. CC Wei even suggested that Edge AI could lead to shorter replacement cycles for things like smartphones and PCs.
Wait, so are we going to be upgrading our phones even more often?
It's possible if your phone or laptop can do all this amazing AI stuff, you're going to want the latest hardware to keep up.
So it's like the AI arms race. Everyone wants the fastest, smartest device.
Yeah. But we're still in the early days of edge AI. It's going to be interesting to see how it all plays out.
Definitely something to watch.
Yeah.
But the Q&A covered a lot more than just AI.
Oh, yeah. Analysts had questions about all sorts of things.
Okay, so we covered a ton of ground in that Q&A.
Hee!
It's like drinking from a fire hose of information.
I know, right? U.S. expansion profit margins, export restrictions, supply chain bottlenecks. We even touched on the philosophical implications of AI.
Seriously, my brain is full.
Yeah.
But let's try to break it down. What are the big takeaways from this earnings call? What should investors be paying attention to?
I think the biggest takeaway is that AI is no longer some futuristic concept. It's happening now. It's driving real growth for TSMC, and they are all in on AI.
Yeah, it seems like AI is everywhere these days, from those massive data centers to our smartphones.
Exactly. And that brings us to the second big takeaway, the rise of edge, AI. TSMC seems to think that we're about to see a major shift in how we use technology. Imagine your phone becoming a super intelligent AI assistant.
That's both exciting and a little scary.
I know, right? It's like something out of a sci-fi movie. But it's happening, and TSMC is playing a key role by developing the chips that will make all this possible.
So we've got AI driving growth for data centers and AI coming to our personal devices. But there have to be some challenges along the way, right? It can't all be easy.
Of course not. TSMC and the entire tech industry are facing some potential hurdles. Supply chain problems, geopolitical risks, even ethical concerns about AI. These are all things that could throw a wrench in the works.
So they're navigating a pretty complex landscape.
Definitely. And remember, this earnings call is just a snapshot. The semiconductor industry is constantly changing. TSMC is at the forefront of all this, but they need to stay flexible and adapt to stay ahead of the game.
It's like they're riding a wave, always moving forward, but also trying not to wipe out.
That's a great analogy. So for all the investors out there, keep your eyes and ears open because there are huge opportunities in this space.
And speaking of opportunities, let's have some fun. It's time for our completely irresponsible, not at all financial advice trade idea inspired by this earnings call.
All right, but remember, folks, this is just for fun. Do not base your life savings on what we're about to say.
Okay, so here it is. Short companies that make traditional CPUs and go long on companies that make high bandwidth memory HBM.
You heard it here first. Why are we suggesting this crazy idea? Well, because TSMC basically said that HBM is going to be super important for AI going forward.
And those traditional CPUs, they might become obsolete as AI takes over.
It's like betting on the horse and buggy when everyone else is driving cars.
But seriously, folks, do your own research. Talk to a financial advisor, and don't blame us if this trade idea backfires spectacularly.
We are not responsible for any sudden urges to invest in robot butlers.
All right, that's it for our deep dive into TSMC's earnings call. Thanks for joining us.
We hope you enjoyed it and learned something new about the incredible world of semiconductors.
And remember, the future tech is being written right now. So stay curious, stay informed, and as always, keep on ticking.